Okay, here is a few examples of a couple of the trades using the Matrix Trader. All right, once you see the price coming into the support zone is bold, as you can tell here. Let me show you. Okay, this is the zone, support zone right here. Once you see price enter in this market, you're going to see this area price playing back and forth a little bit. So next thing you do, you take your profit projector, you click where you're going to place the stop loss, which is the bottom of the bar right here. You click here, and then you click the entry point, which is top of the bar on the breakout, and automatically you will have your profit target and your risk calculator figuring out your risk for you. So you can see, if you look onto your top of the screen, you will see that the stop loss, SL, stands for stop loss risk. It's 7 points, 70 ticks, $100 per point. It is $700 risk. And using a 3% equity, which is $900, you can take a trade with 1.3 contracts. So you round it down to the 1, and you can take one contract, and this is your profit target potential. Profit target 1, it would be $2,800. Profit target 2 would be $4,200. Profit target number 3 would be $5,600. And if you come down here to where the profit targets are, if you look over here, you will see first profit target is set at 4.0. Second, when I say 4.0, let me tell you that it is 4 times your risk. So this is what's called a risk to reward ratio of 4, which means if you risk 1, you make 4. Over here is 6.0, which means if you risk 1, you make 6 times risk. That's why 6 times 7 is $4,200. And the one above it would be 8 times risk. So if you risking 700 times 8, that would be $5,600. So we don't know exactly which one of these profit targets will get hit. Sometimes you enter a trade and it can go down and stop you out. Sometimes it can go hit the first one or second one or third one. So generally what I like to do, I like to put my profit target at 6.0 on the second one, the middle one, and I'll trail my stop loss underneath the bars once they reach the 4.0 target. So let's see what the market does in a few days. We're placing a trade right here based on a breakout, looking for a green bar to continue. So let's wait and see. Okay, as you can see, just a few days later, your first target is hit. If you would have placed your stop loss, profit target, if you would have placed your profit target at 4 times risk, you would have already been out with $2,800. But sometimes when the market is dark green, you see the dark green bars, it means the market is strong. So instead of placing my profit target on the first one, like I said, we're going to put it on the second one. And now we're going to place our stop loss underneath the low here, because we want to put tight stop in case it comes back, it kicks us out with a good sized profit, even if it's not 4.0. But our goal is to hit the second target at 6.0. So basically, with the drawn tool, trend line, the stop loss goes here, and the blue line will be the stop loss. If the price comes down and touches this and the next bar, we will be out. But hopefully we can hit the 6.0. And sure enough, once it broke through the profit target right here, so the stop loss was placed underneath this bar. So when the next bar closed, we would remove the stop loss and put it underneath this low, right where the profit target is. So basically you would have ended up making four times risk anyway, couple ticks off. Okay, so the stop loss would have went here, and on this day the bar went pink, letting you know the mood of the market has changed, And the fact that, you know, see, it's change. Okay, there you go. So we would know exactly because we entered resistance. You see these burgundy dots, the pink dots, that's all resistance, that's ahead. We knew possibly we could be thrown down here and sent back. So even if you didn't know on the first pink bar, second pink bar, on this last red bar, you would have had your forecast show ahead of time your resistance. Basically, when you see this resistance showing up, the markets are due for profit taking or tight stops. Because once you see the heavy resistance, when it's bold, you will need to take profits, and it's going to probably end up going to a different zone. So this trade is pretty much over. We are stopped out, and let me remove the targets. And just to show you, the price oscillates from zone to zone. So this was the first move into the zone, played and came back into the second zone, then came back and went to the third zone. And the markets oscillate between support and resistance. And the good thing with the matrix trader is that it outlines when support and resistance is strong. So you see this is bold, and this indicates that the resistance is strong. Markets are trending down. This is a minor pullback. Then you see right next the following month, it showed you that the dots got smaller. It shows that the resistance is not as strong, and it could possibly be broken very easily. And sure enough, it broke it here, but it couldn't sustain it. The price got pushed back down. And so here's a trade. Let me go ahead and remove this. Okay. So this is a classic trade, a good successful trade. So this zone is called a support, strong support and resistance zone. This is strong resistance when you have bold lines, and you also have other resistance stacked up with it. You have the crosses. When you see the crosses join the resistance, that's also indication that it's extra strong. So that's what this means right here. It doesn't even have to go into the zone to fall down. But anyways, I want to make this video quick, showing you a couple of successful setups, then coming back to a different trade. So here's another trade here. This is called a rocket. See right here, it says bear rocket. You would know in advance that there is a bear rocket. Basically, what you look for is for a price to move into the zone, and you take the trade. Let's say you would have taken a trade here, and sure enough, it came back and stopped you out right here. Then the second trade would have been here, coming back, putting your stop loss here, and your entry on the lower. Boom, you would hit 4 times risk, almost 6 times risk. I would have definitely trailed my stop and would have been got out right here on top of this bar. All right, so now we're here back on another trade. So this was the last trade we took. We got stopped out. It went from zone to zone. Now it's back into another zone. It didn't sit quite inside the zone, but it dropped into the next zone. And we would once again take the projector, and our stop loss would be under this low. So we're going to go ahead and hold shift and click on the bottom where we want to place the stop first, and we're going to hold shift and click the top all simultaneously. So once you plan to put a profit and stop loss target area, you have to hold the shift down without letting it go, and you click the bottom and click the top, then you let the shift go. So automatically, so it lets you know that on a daily bar your risk is 1281, and target, it's still very strong. The upflow is really good, the bars are green, and so this could be an exhaust bar, so I would play it safe and put a stop loss and trail it underneath this low, because I wouldn't want to give this profit back, because that was a big stop. So what I do is put the stop loss underneath this low, and we're going to keep trailing it up till it kicks us out. So let's see where the market goes in a couple days. All right, so here we are. We hit the first profit target, and as you can see, the stop hasn't gotten hit. So I would move my stop underneath this pivot. So do you see this these black dots right here? You see 1, 2, 3, 4. These are called a pivot, the swing low. This is where we want to move the stop. But one thing to note, that this purple line is an exhaust. In this case, whenever you run into a purple, I would look to get out. Let me show you what I'm talking about. This is called an exhaust zone. It's marked for you. This is one thing that makes this software so powerful. It lets you know you have major resistance ahead, and when you have an exhaust like this and you're already in big profit close to the 6.0, as might as well take the profit. Or you could just, if you have multiple contracts, if you have 2 contracts, I would take, I would take profits on one right here, and I would leave the stop loss on the second one down here. So let's see where the market ends up in a couple of days. I have to turn this off. Okay, hang tight. Okay guys, we're back again, and as you can see, yes, it would have been a good idea to take profits over here on the first one. And if you had a second contract, your stop loss is underneath the swing low, the black dots. That's why they're there. They're there for you to place your stop. And then now that the market's moved up a little bit and you've already taken your profit, you move the stop loss to the bottom of this pivot. As you can see, this is the new stop. So this is for your second contract. First contract, you would take profit. Only if you had a second contract and your account was big enough, then you would, have a second contract, and then you move your stop from here to the next pivot, which is here. So let's see. Right now we're approaching resistance here, the pink line. But let me tell you that what we see here, the bold support zone, this is called a rocket. And how do you know it's a rocket? Because it tells you right here the market conditions have changed. It is a congestion action. It could be going into a trend run, but a bull rocket is how all trends start. Most trends start with a bull rocket, with a big swing to the upside. So because we have a bull rocket here, it's a great idea to keep the stop loss underneath the pivot here. We're going to tighten it up, and just let's see what the market does in a few days. Hang tight. All right. Wow. What a surprise. The bull rocket was, accurate on this one, and the price was in the rocket zone, and we had our stop loss down here if there was a second contract, and the market just took off through second and third. So what you see here is it's entered another level of weak resistance, but this red line right here, this signifies very heavy resistance when it's bold, and they only show up from time to time when it's relevant. When you see this red line that's bold, usually what this means is that your weekly time frame momentum has shifted and is giving you a possible trend reversal. So automatically, when you see heavy resistance or strong resistance, you take your stop loss and you put it under the low right here in case the price comes back, and it'll get you out. That's what I would do. So hang tight. Let's see what it does in a couple days. All right, let's see. So this was our stop loss. Sure enough, when the markets open, this resistance proved to be strong, and as a matter of fact, once you stopped out, there was additional resistance that showed up. See this red line that shows up? The good thing is you always know your strength in advance. Everything is forecasted into the future. Before the weekly opens up or the monthly opens up or the next time frame opens up, you have a leading indicator that lets you know in advance what you're looking at for the month. So here's a good trade that hit almost 8 times risk. Let's just say call it a 6.5 right here, almost 7. And if you were watching the market and this got close approaching it, you could have taken it out or zoomed into a 240 minute and see if you could have gotten out early. But let me remove these and let's see if there's any other trades coming. So by holding shift and clicking on this, they disappear again. So let's see where the markets go. All right, so this is one more trade that I want to show you, and it's the last one. I don't want to make these videos too long, so this is a perfect example. The price is in a downtrend and exhausts right into the purple zone. So this purple zone, once again, let me show you this purple zone. Okay, there you go. This purple zone is considered a exhaust. Anytime you see these above you, it's an exhaust, and it's going to send the price back down. And if they're below you, they're going to, let me show you. Anytime they're below, they're going to send the price back up, okay, down here. So you have support exhaust, you have resistance exhaust. So let's see where the markets go. What we need to do is wait for a smaller bar and then look for the breakout. While they're dark green like this, we never place trades. You want it to be a light green at minimum, or you want it to be pink before you trade, because this could keep going and break right through this resistance and go. But you better bet that if the market cools down, the bar color will change to green. The algorithm can recognize when there's momentum and when there is not momentum there, and it will automatically tell you that it's time to short it. And one more thing you can look at, you can see the money's leaving. Everybody's already taking profit. This is the money flow index, and if you can see that this right here indicates it's already in the extreme zone, and it's ready to come down. So let's see what it does in the following bars. Okay, so we're back, and 2 days later we see we got a bar that's light green, which means it could potentially come back down, which it did in the second bar. So once you get the green bar, you want to place your stop above this bar by a couple ticks, and you want to place your entry on the low, and you can take the break of the bar here, and sure enough you would have been in profit already. And let's see where the market's going in a few days. Your risk already, you already know, you would have risked $981 to make $3,921. So let's see what happens in the market next few days. So as you can see, the markets have already moved against us. Markets came back, and it's inside this yellow, which means it could kick us out if it reaches above this yellow line, where that's where our stop is. So we're not gonna remove the stop loss. In my younger days, I used to remove the stop loss because I used to panic that it's gonna hit it and turn back around. But I've learned my lesson to never ever remove a stop loss. So we have our risk management. We have a great probability that we're going to be making lots of good trades. So there's no need, if this wasn't meant to be, it gets stopped out. It gets stopped out. We're going to look for another trade. So this looks pretty aggressive. I'm sitting tight right here with our stop. Let's see where the market's in a few days. All right, guys, we're back in a few days, almost a week. And as you can see, the markets came up to the stop loss. They didn't quite hit the stop loss up here. It missed it by a few ticks, and the price continued on down. So now we're waiting to see if we're going to hit the profit target here. But one thing I would like to notice, point out that, let me show you this green line right here. Okay, see this green line? Okay, it went from being red. This is called the center line. Once this center line changes direction to green, this could send the price back up. But what we have going on for ourselves, we have very heavy resistance here. You see the resistance zone is bold, and it's giving us a zone underneath. So this could possibly stop us out, hit this and bounce back, or it can go right through it to hit our profit target. In any case, I would not put my profit target at 6.0. I would keep my profit target at 4.0 because with a tight stop behind it. So let's see where the markets end up. I would definitely move my stop behind the low here to one bar back, and I'll keep trailing it down till it stops me out. But I do not want to give this profit back. This is a nice chunk of profit, even though it's not 4.0 yet, but it could very well get there. Okay guys, so here we are, and the price bar has turned green. Obviously it's shown a lot of strength here, where the center line has turned green. It's shown that the direction has changed, and it could possibly send the price back up. So if it was me, I wouldn't wait to get kicked out. I would go ahead and make a very, very tight stop above this bar. And if it comes back to break this, if it drops, great. If it doesn't drop, because you never know which direction the markets will go. When you're playing around with technical analysis, you're playing the probabilities and the odds. So here we are. That's our stop loss right here. Very tight. We're hoping it comes down here, but we don't know. We can't control and worry about that. All right, we're back, and as you can see, we got stopped out. So we're going to go ahead and remove this trend line, and we got stopped out right here above this bar. And with a profit that is probably 2 times risk to 2.5, we didn't quite get to the 4 times risk, but it's okay. We catch and release until we hit a 4 or 6 time risk. Let's remove those stop loss, and this will be the last trade of the series. I'll be making over 90 different lessons explaining all my setups. There's only 5 setups that I will show you, and all those 5 setups has taken me 15 years to figure out which ones will give you the highest risk to reward ratio, 4, 6, 8 times risk. It's really unheard of that more than half my trades land at 4 times risk. And half of those trades land at 6 times risk. So your winners are always outrunning any small losses you have. Thank you.